So question of the day, how do you invest $100 in the stock market? I've thought a lot about that over the past week or so, especially on my birthday, which was on August 8th. And by the way, guys, thank you so much for everyone that wished me a happy birthday on here and my social media platforms. I really appreciate it. But anyway, as I was opening my birthday gifts, I knew a lot of the gifts were gonna be money related, specifically money, which I definitely appreciate. As I get older, I can just buy whatever I want. And that's normally what I do. I just buy things knowing that they're just gifts from other people. But this was the first time I actually decided to invest that money, because do I rather buy things that more than likely won't appreciate over time, or invest a small amount like $100 that will? And $100 is something that a lot of people may have to invest, but are a little concerned on how far it will go. So in this video, we're gonna go over 4 different categories of stocks that you can invest in right now in the stock market for just $100. Let's get started. What's going on, guys? My name is Darren Jackson. I hope you're having a beautiful Thursday so far. And a lot of people are investing right now despite what's going on in the world. There's a lot of discounted stocks that people are trying to research and take advantage of. And a lot of people have been creating and growing their platforms at this point. Now, there's a lot of videos out there that talk about how to invest $1,000, maybe $5,000, and even $100. And $100 doesn't sound like a lot of money, as I've said before. There's a decent amount of options of stocks you can buy, but there is no possibility that you can use $100 in the long term and become rich off of it. It more than likely won't happen. But again, my mindset off of it when I was thinking about this on my birthday, and your mindset should be, would you rather take the $100 and purchase something that will more than likely depreciate over time? Or would you rather take that $100 and whether you're gaining 5 cents or 10 cents in dividends every month, or gaining 2 to 5% of capital every year, it's still a gain. So that was my mindset. And I know a lot of people are curious on how to invest a small amount like $100, because not everybody has $1,000 roaming around that they can invest. I sure as hell don't. So that's why we have this video today. And specifically in this breakdown, we're gonna go over 4 different categories of stocks that you can invest in. Each category, I'll use 2 examples. The first category is of course gonna be stocks that are under $100, so you have the possibility of buying more than one of them. The second category will be stocks that are monthly dividend paying stocks, which are my absolute favorite because I love getting those consistent monthly dividend checks. Then we're gonna go over ETFs. Now, one of the ETFs is a monthly dividend stock, but it's also ETF, so that's a lot of security, a lot of volatility you're avoiding. And the fourth category are fractional share stocks, meaning stocks that are more than $100, but are very recommended to invest in even if you're getting a fractional share of it. Now, keep in mind, guys, I'm in no way, shape, or form a financial advisor. I'm simply just a guy that's gonna probably say the same things as other guys when they say that they're not financial advisors. I'm just a simple YouTuber making videos out of entertainment about things that I've learned over my investing journey that hopefully help you guys out. So with that being said, the first category is stocks that are under $100. There are a lot of stocks that are worth less than $100. There are penny stocks, which I recommend you not invest in unless you are an experienced investor or this is something you want to do. I tried, didn't like it, hated it very much. So the very first stock that's under $100 is one of my favorite stocks up until this point. It is ticker symbol KO, which you guys know as Coca-Cola. Coca-Cola is the #1 beverage company in the entire world. They own different soft drinks and drinks such as, of course, Coca-Cola, Diet Coke, Sprite, Minute Maid, Dasani, and Fanta. So they're pretty much everywhere. They're the biggest soda company during the Christmas holidays. Their polar bears are looking all cute, which, by the way, guys, don't look up polar bears attacking wildlife on National Geographic. It's nothing like what they show on the Coca-Cola commercials. It's very depressing. So anyway, guys, this company goes for a little under $50 a share and has a little over a 3% dividend yield. So you're looking at about 41 cents per quarter, which is a pretty healthy amount. And one thing I do love about this company is its overall growth. I've elaborated on how growth is becoming more important to me and in my investing journey. And with this company, even with everything that's happened during this pandemic, they've shown an 18% increase over the past 5 years. And prior to what's been going on this year, they've shown almost a 50% increase. So you're looking at consistent growth on a yearly basis with consistent dividends coming in. They have a healthy PE ratio, which means they have a lot of money that not only they're giving out to the shareholders as rewards, but they're actually holding on to help grow their company from the inside so they can reap the benefits of that, which means they could potentially increase their dividends that they're giving out to us as shareholders. The second stock in this category is another company called AT&T. It's again one of my all-time favorite dividend paying stocks. It has a 7% dividend yield, which it pays out every quarter. It hasn't changed. I believe it's increased over the past year or so. I love it. They are a telecommunication company. Of course, you've heard of AT&T, one of the largest phone companies, which I currently don't have, but that's another subject for another day. They have recent affiliations such as Warner Media. They just recently created HBO Max, where you can stream a lot of HBO shows. They're a pretty big deal. And they've recently come out of a situation to where eventually with all these new 5G phones coming out, you're gonna need 5G cells that appear in different parts, physically different parts of the state and the nation overall, so they can transmit these 5G cellular waves. And originally a lot of states were putting caps on how much they would allow the company to spend to put these out, and that wasn't giving them enough room to put enough cells out. So that has been revoked. So now they have the freedom to put out as many as they need, which means companies such as Verizon and AT&T have enough to flourish and potentially create more phones that are 5G accessible, which means that the company can increase in their capital balance, which means their share price would increase as well, which is beneficial for the shareholder. So those are two stocks under $100 I would recommend you guys look at and potentially invest into. The next category, monthly dividend paying stocks. Again, I love monthly dividend paying stocks. And these two stocks in particular are known as REITs, which are real estate investment trusts. It's basically being in real estate without really being in real estate, without actually purchasing the home. You're just investing in companies that do it. Now, the first stock is a stock I've talked about before. I love it. It is one of my most consistent monthly dividend paying stocks, and that is STAG Industrial, which is ticker symbol STAG, STAG. This company is about owning and acquiring and running single tenant industrial buildings. So any factories or warehouses, STAG is probably gonna have their print on it. So STAG pays about $1.44 every single year. So you're looking at about 12 cents a month. And the reason that STAG and other REITs are able to pay a decent amount every single month is because as a REIT, they're required to give up 90% of their earnings from these tenants and give them right back to the shareholders and then keep the remaining 10%. So a lot of companies like STAG will be able to do that. And that's one reason why I appreciate this company, because not only are they increasing over a long period of time, but they're consistently paying out dividends, and it makes it an opportunity to pay out more, especially like the next company in this category, the monthly dividend company we all know and love, which is Realty Income, ticker symbol O. I talk about this company a lot as well. I think I actually mentioned it in my last video. They are another REIT that is in the ownership and acquisition of single tenant properties such as Dollar Tree and Walgreens and other stores of that nature that you probably pass by every single day. And those companies, as I've said again in my last video, which I'll put the link up above here, they are responsible for giving you groceries, everyday items, medicine if you're going to Walgreens and stuff like that. And despite what's going on in this world right now, they're going to be very important for people to go to get their essential needs, such as masks, which by the way, I hope you're wearing right now, or at least throughout your day. Got to make people safe. So anyway, Realty Income pays about 23 cents per month per share that you have of their stock. And I am so comfortable with having this stock, and it's a stock I'm going to hold on to for the rest of my life because they have a very high track record of over 300 consecutive months of dividend payouts and increase, and I believe over 30 quarters of consistent dividend increase. So despite the fact that they have to give up 90% of their earnings every single month into the shareholders, being you and I, they still make enough money from these tenants and these stores that they're comfortable enough to increase how much they give us every single month. So this is definitely a monthly dividend stock that I would recommend you guys invest in right now as soon as you possibly can. And they're both gonna also run you under $100. So you can buy a couple of them if you choose to. Now, the third category are ETFs, which stands for exchange traded funds. Just think of these as a basket of stocks. So you have a lot of stocks, for example, Apple, Amazon, Facebook, Tesla, AT&T, et cetera, et cetera. Instead of investing in each of those individually and hoping that each of those doesn't negatively impact your entire portfolio, you can invest in one particular ETF and it splits up all of your funds into as many companies as it holds. So the first company that I would recommend you guys look into that's an ETF is ticker symbol VOO, which is the Vanguard S&P 500 ETF. So VOO tracks basically every single stock within the United States stock market, and its biggest sector, which is very beneficial, especially during this period of time, is technology. So you're looking at stocks such as Microsoft, Apple, Amazon, and Facebook being some of its top stocks within this ETF. And a lot of these stocks are thriving despite what's going on because people have access to computers and it doesn't require being somewhere physically. So this is definitely a good ETF to be in, despite how pricey it is. It is about a $200 ETF, so it does fall into the category of fractional shares as well, but considering its overall growth, it's definitely an ETF you should consider investing in. The other ETF is probably my all-time favorite stock to invest in overall. It is SPHD, which is the S&P 500 High Dividend ETF. And again, I love this stock. It takes the top 75 highest dividend paying stocks within the S&P 500. And then from that list, it takes the top 50 lowest volatility. So basically it wants to put you in an environment where you can trust it to give you the most it can in dividends every single month, but at the same time, you don't see a lot of negativity going on in your overall growth. So its expectations are to consistently increase, and if it does increase, unless it's by some drastic situation, kind of like this pandemic, you're not gonna see a lot of volatility. So you're not gonna see any major drops and mountains and sudden pickup. It's a pretty steady stock. Now, this ETF pays about 15 cents every single month, and it hasn't changed since I invested in it, so it definitely exemplifies the steadiness of this ETF. And it's a very cheap stock. It's probably right now in the mid 30s per share, so this is definitely an ETF that you can invest a couple of shares into and have that money divided up into 50 shares per ETF that you invest in. So definitely look at that one as well. Now, the final category of stocks to invest $100 into are your fractional shares. Again, very expensive stocks. These are stocks that even myself will look away from just because I would like to buy one share every time I purchase any type of stock. But it's a little harder because not everybody has, again, hundreds of dollars laying around to invest into. But now a lot of companies such as Robinhood utilize fractional share as a special feature, which means you can invest in these stocks with as little as $1 to $5. You have partial ownership of this company, which means you do get partial dividends, but you still enjoy the growth, just like the company is overall. The first company that I would recommend investing in with fractional shares is Johnson & Johnson. It is the dividend king of the stock market, or at least one of them. What that basically means is that Johnson & Johnson has gone over 50 consecutive years of dividend increases. Right now, I believe it is approaching its 58th year. So you are expecting consistent dividend payouts and consistent growth from Johnson & Johnson. Now, what I was a little concerned about Johnson & Johnson when I continued to do my research on them before I invested into them is the lawsuits that they've had. They've had a lot of lawsuits on their baby products and even their role in the opioid crisis, which is very scary. But what's keeping them afloat is their cash flow. For the past 10 years, they've been able to consistently have between 10 to $20 billion just in their back pocket. So whenever these lawsuits hit, if they have to reach a settlement, they're able to pay those off and at the same time have enough money to support their company and to pay their shareholders, so that way they can continue to not only pay dividends, but increase dividends, which as a matter of fact, their dividend increase went from, I believe, 95 cents to $1.01 this past quarter. So they're consistently giving back to the shareholders. And what makes this company even more appealing is the fact of their growth. As I've said before, they've had about 50% growth in the past 5 years, which is actually higher than the entire S&P 500 by 10%. So that's a pretty good thing. But considering pretty good things, really good things, actually the final stock that we're going to talk about today in this category of fractional shares is Apple. Apple, everybody knows what Apple is. They're probably the leading phone company, which hurts for me to say because again, I love Samsung, but they have their Apple iPhones, which are selling out every single year, every 6 months practically. Their MacBooks, their desktops, pretty much anything and everything Apple made, their iOS systems, Apple TV launching. They're doing some really big things, and they are probably the headlining news besides Tesla as of the past couple of weeks when they released the news that they will be doing a 4-to-1 stock split, which is completely beneficial, especially for small stockholders, which I feel like why this is the best company to mention in this video, because they're specifically doing this stock split to be more appealing to people that want to invest but are a little afraid of how much this company is worth and how that'll compare to what their growth will look like, despite the fact that you can do fractional shares in these companies. I totally get it, and it's very beneficial, and it really keeps you in mind of how much Apple was worth before they have done even their first share split, which they did back in 1987. This will actually be their 5th one. But despite all of that, it's a quarterly dividend paying stock. They've grown tremendously over the past 5 years, let alone the past 6 months. And I'm very confident of the growth that this company will have over the long run. I feel like it will be one of the juggernaut companies of all time. This company has had a lot of potential and will continue to have a lot of potential in the future, which is why I feel like Apple is a stock that you should invest fractional shares in as often as you can and as many times in a healthy manner as you can until you own shares of stock, because soon enough they will be at a more appealing price to many of us, and you'll be able to reap the benefits of the growth as other people have previously done during these previous share splits. So I really hope this video helped persuade you guys a little bit more that $100 is a lot of money if handled the right way. You can either be afraid of $100 not being enough to invest into, but instead you can use it towards birthday gifts from other people, such as something that I would normally do. Or you can take that $100 and invest it in healthy stocks, whether they're less than $100 or they're more than $100, and you're utilizing a feature that brokerage companies such as Robinhood, Stash, and M1 Finance have created in fractional shares, so you can reap the partial benefits of these stocks, which are still benefits, and watch your assets grow over a long period of time to the point where eventually, yeah, you can take the $100 out that has turned into $200. So hopefully that gives you that mindset, and hopefully this video has helped. Make sure you watch some of these other videos that will hopefully help you guys in your investing journey as they have in mine. I really do appreciate you guys taking the time to watch this video, and until next Thursday, take care.